What's up, traders? Steven here, your honest trading coach. And first today, I want to take a look at a live trade I had on the Aussie Yen yesterday, and then we'll dive into the rest of the content. So let's take a look at that, and I'll be right back. All right, traders, so here we have a nice trade based on top-down analysis and a couple of other factors on the Aussie Yen. I'm going to go ahead and place this order. It's going to be a market order. I'm going to put in my take profit and stop loss. The stop loss is 47. Our take profit is 65. And I want to be risking 1% on this trade. Oop, not 2%, 1% on this specific trade. All right, so now we can go ahead and place the order. And there we go. I'm going to keep you guys updated on this trade and also talk to you about the analysis behind it once it completes. So I'll see you in just a second. Welcome back, guys. Now let's go ahead and take a look at how that Aussie Yen trade played out. So right there was our entry candle. That's the one you guys saw me enter on. Directly after that, this trade hit targets. Now, this trade was based on a fantastic technique called top-down analysis. And for those of you who are new, this just means looking at the overall picture of a market based on a higher time frame and then trading based on a lower time frame entry signal. A lot of traders, though, get confused by this. A lot of traders say, what do I do if my 4-hour chart is showing an uptrend, but the 15-minute chart is showing a downtrend? And this kind of confusion can lead to them losing a house payment worth of money or them missing out on really good trading opportunities because they're completely overwhelmed from doing too much analysis. Now, I personally have a 3-step process I use every time I do top-down analysis, every time I use this technique, and that's what I want to share with you in today's video. We're going to go over this trade that you see on the screen, the Aussie Yen. I'm going to talk you through the full top-down analysis breakdown. And then I'm going to break down the top 5 major pairs for you using top-down analysis, and while doing so, teaching you the exact way that I personally use the 3-step process that I personally use to do top-down analysis that keeps me from being confused and gives me a really accurate probability of success when trading using top-down analysis. That way you can start using top-down analysis correctly in your own trading. So if that sounds good to you, go ahead and click that like button for me. Click subscribe if you're not already down below the video to the right hand side to be alerted when we come out with new content, and follow us over on Instagram at The Trading Channel. While you do that, the intro and disclaimer is going to roll, and I will see you directly after. Welcome back, traders. So let's go ahead and dive into the content. The first thing we're going to discuss today is time frames. The reason for this is because I got a message from a client yesterday and he was saying, dude, I was gonna go short on a 5-minute chart, but then I looked at the daily chart and it was in an uptrend. So I decided not to place that trade. Now I want you to think about that for a second. And let me do some math with you. On a 1-day chart, one day, there are 288 5-minute candles in one day. On a daily chart, 288 candles is over a year of candles. In a year on a daily chart, do you think that the market has uptrends and downtrends? Yes. On a 5-minute chart in one day, those same amount of candles exist. On a 5-minute chart, what I mean by this is a 5-minute chart and a daily chart have literally nothing to do with one another at all. That is too far. You want to keep it relevant, and a lot of traders have this problem. They don't know which time frames they should be using when performing top-down analysis. So what I want to do right now is clear all of that up, and here's how. If you look up top left-hand side of my screen, I'll try to zoom in on this for you. Right here we have some numbers, some charts, right? These are the most popular and most often traded charts, time frames. You know what I'm saying. 5 minutes, 15 minutes, 1 hour, 4 hour, daily, and weekly are the most often traded charts by traders. What you want to remember when doing top-down analysis is you never want to go up past 2 time frames. Example of this, and I'll start from the lowest time frame. If I'm a trader that says, hey, I'm going to be a day trader and trade the 5-minute chart. Well, if you're trading the 5-minute chart, then your top-down analysis approach needs to come from the 15-minute or the 1 hour. Those need to be the 2 time frames you look at for your top-down analysis approach. If you're trading the 15-minute, where do you think you should be looking for your top-down analysis approach? You were right, the 1 hour and the 4 hour. If you're trading the 1 hour, you want to look at the 4 hour and daily. I personally trade the 1 hour chart and the 4 hour chart. So the daily chart is what I look at for my top-down analysis approach. You never want to go up more than 2 time frames because you want to keep it relevant to that trading time frame. So now that we have that cleared up, let's go ahead and break down this 3-step process I was telling you about before the intro and disclaimer that I use to do top-down analysis every single time I place a trade using top-down analysis. Let's go over that now, looking at our Aussie yen trade from before. So step number 1 in this process is to look at the trend of your top-down analysis time frame. What's the trend of your higher time frame? In the Aussie yen here, what trend are we in? Well, we're making new higher highs, new higher lows. New higher highs, this could be our higher low to push the market higher. We're in an uptrend here. It's very obvious that we are in an uptrend on the Aussie yen. So with that tackled, now I have step 1 out of the way. On the daily chart, which is my top-down analysis, higher time frame, I know I'm in an uptrend. Step number 2 is looking for structure levels, and I have 2 types that I'm going to look for. Support and resistance structure. I'm going to look for 2 different types. I'm looking for trend continuation structure, and I'm looking for barrier levels. What's a trend continuation level? Let's go over that first. If I know I'm in an uptrend, one of the main trend continuation levels is going to be the previous level of resistance that was tested, especially if it was tested more than one time. If that level is the most recent level broken and it's been tested multiple times, that's definitely a level I'm looking at for possible long trades to continue the uptrend that I've already defined by looking at trend on my higher time frame. This is definitely an area I want to be looking for that uptrend, that trend continuation to the high side. So that's my trend continuation level here on the Aussie yen. What's a barrier level? Well, a barrier level would be the next level of resistance this market will inevitably hit if we continue in this uptrend. So if you're going to be, let me slow down for a second for anyone that's new or kind of intermediate in trading. If you're going to be only a trend continuation trader, you still need to look for barrier levels because that might be a place you want to take possible targets. If you're strictly a trend continuation level, you don't have to be a counter trend trader at these barrier levels. I personally am. At barrier levels, I trade counter trend. So if we're in an uptrend, what would I be doing? Going short at these levels based on entry reasons on lower time frames. I don't just go short because we hit resistance. Let's go ahead and point out some barrier levels. Would this be a barrier level right here? Well, for me, that's a no. And the reason is because we are in an uptrend. We've already defined that earlier, right? We're in an uptrend. What has to happen for us to stay in this uptrend? Well, if we're going to stay in this uptrend, we're going to keep making new higher highs, we're going to break this level inevitably. So if that's the likely situation is that we're going to break this level of resistance that the market just pulled back from, then this is a level I'm not paying attention to as a barrier level because the market's likely to break it considering we're in an uptrend. So that's not a level I'm going to be paying attention to for anything. What am I going to do? I'm going to put my horizontal line at that level, scroll the chart out, and look for the next level of resistance higher. In this case, we have a level right here and a level right here. Those are my next 2 barrier levels, showing me that these are the places, if this market continues in an uptrend, that it's likely to either pause, have a retracement, or possibly even reverse and fall down. Completely reverse, right? Those are the 2 scenarios I have at these levels. And it could blow right past them. This is just the likely scenarios that we see at least a pause. So there is a level, there's a level. I have my levels marked now, my barrier levels. What am I going to do? Well, in this specific case, on our chart, I saw that the market was coming into my level of trend continuation, my trend continuation structure level, while we're in this uptrend. So I drop down to my trading time frame, 4-hour or 1-hour. And I'm looking at this 4-hour and 1-hour chart for possible entries. I want to be in my zone, and I want to see something that gives me an indication that we're going to head higher. A nice wick rejection of the bottom of this zone would be a great thing, right? It's a great reason to say we're possibly going to go higher from this daily level of structure in this uptrend that aligns with my higher time frame for my top-down analysis approach. So let's see what happens here. There's a little red candle, another little red candle, and there we go. We have a nice wick rejection of the bottom of our zone. That gives me a good indication that we could possibly see this market head higher, even on the daily chart, and continue that trend. I'm really interested in this trade. Ended up taking the trade right there, and this market continued higher afterwards. So with that being the case, we'll go ahead and hit play, see where this market is now. So with that being the case, what I wanted to make sure of is that I had enough room to hit targets before my barrier level, and obviously I did. I wanted a 1.4 to 1 risk reward, so obviously that was the case since I could have got a 5.2 to my next barrier level if we continue that trend on the daily chart. So after step 1 and 2, we had trend, we had our structure levels, then what did I do? If the market was still back here, and I'm out on my daily chart, what am I doing at this point? I don't have a trade. I don't need to just place a trade because all this is coming together. What I did was prepared. And let me teach you what I mean by prepared and talk about it a little bit. Being prepared is something almost no traders do. Impatience is what leads to so many losses because every trader, maybe you're not like this. I know I was towards the beginning of my trading career, and even in the middle of it, I got caught up in this a little bit. Impatience. I felt like I needed to be in a trade every single day. If the market, I needed to be able to look at the daily chart, drop down to my trading time frames and find a trade right then. But that wasn't the case. Let me show you what being prepared looks like. If my market replay will work. Hold on just a second. Bear with me, guys. Let's say this market's right here. I know there's a level of resistance here. Right? I've already done my analysis. Let's say I'm doing my analysis when the market's right here, which is probably when I did all of this analysis actually. So the market being right here, I've pointed out my uptrend. I've pointed out my structure levels. I know my trend continuation levels here, my barrier level and barrier level are here and here. With that being the case, do you think I'm gonna look at this daily chart, then drop down to a lower time frame and just place a trade? Because I know I wanna have a trade, I'm being impatient? No, that's what I've learned over the past almost decade of trading. I started when I was 18. I just turned 28. That impatience killed my trading in the beginning. You might be going through something similar. What you want to do is prepare afterwards. Do your analysis, your top-down analysis, your breakdown of trend, structure levels, trend continuation levels, and barrier levels, and then prepare. Tell yourself what you're going to do if all the stars align. So then the stars started to align, if you will. Very cliche saying, I know. But as this market pushes down, I realize there's a pretty good chance we're hitting my trend continuation level. I was already prepared though. Step 3 is to prepare. So this 3-step process is trend, structure, prepare. Once you're prepared, you deal with it once it gets there. Your preparation can be a strategy you have or an entry reason you have at these areas on lower time frames, but don't be impatient. Only trade when those stars align. And as you can see, the payoff of that in this particular situation, which doesn't always happen, but it does give an edge or an advantage, which is what we look for as traders. The payoff here was a profitable trade that I'm still involved in. This was just my first target. So that's how you do it. That's what we did on the Aussie Yen. That's the top-down analysis approach.